Good morning. I'm Rhonda Holt, the Loan Maven with Thrive Mortgage, and welcome in to the Loan Maven Show, where we talk about all things mortgage. Today, we're going to be talking about the documentation that is needed on a mortgage. That is the biggest, I guess, question around what is needed to get pre-approved to be able to get into a home, or what is needed to qualify to be able to buy a home. And there are certain documents that you need for a purchase versus maybe a refinance. So what we're going to talk about today is purchase requirements around, documentation around purchases. I think that I always say around the documentation things, do not shoot the messenger. Because, it's not me. It's not your local mortgage lender that is putting this making things hard for you, making things complicated in any way. We're trying to make it as easy as possible for you to get pre-approved and get into your new home. But there are documentation, and everything is governed in the mortgage world by Fannie Mae, Freddie Mac, Gus, all those little things all those little acronyms that you hear about.
Cute names.
Right, there's little cute names. And the FHFA governs Fannie Mae and Freddie Mac, and just add another one to the list. But so we can't, as a mortgage lender, require a document from someone that we wouldn't normally require from someone else. Does that make sense? So, Mary, for example, if you're if you work an hourly employee and, we can't, for example, ask you for pay stubs and not ask another hourly employee for pay stubs.
You have to treat everyone the exact same way.
Exactly. Because there's laws and there's rules and guidelines and regulations that govern mortgages. It's just to protect everybody.
Yeah, it really does protect everybody involved.
Right. Protect against discrimination, protect against fair lending practices. All of that comes into play when we're looking at loaning money to folks. Now, documentation needed to purchase a home. So let's kind of go a step further. So we're not talking about pre-approvals today. We're talking about, okay, you've been pre-approved. You've now found a home that you want to buy. You've written an offer on the home. The home has now been accepted. And now your realtor, you send me the contract for purchase that's signed by all parties, that has all the details of what's involved in the transaction of the house and so forth, when it's going to close and so forth. And what I'm going to do is I'm going to look at our situation and see exactly what I need based on your criteria. Now, some of this, bear with me, has already been asked for when I do the pre-approval, but I'm kind of going to start at the beginning of things that we will need for sure. The first thing that I'm going to look at, other than credit, is income. That's the second most important thing. Obviously, you've got to have a method to repay the loan. And when I look at income, I'm going to ask you, are you a W-2 employee? Are you hourly or salary? What are you? And they're going to say, well, I'm an hourly employee. And how often do you get paid? I get paid twice a month, whatever. I pay weekly. Well, I'm going to need 30 days of recent pay stubs. And the reason why I need 30 days recent pay stubs is, and this happens a lot, if you're filling out one of my easy online applications that can also, just to let you know, be reached at the loanmaven.com website. But if you're filling out or have filled out one of those applications, and let's say you say, I work 40 hours a week making $15 an hour. And I get the 30 days worth of pay stubs, recent pay stubs, and I see, well, I look at your gross year-to-date income because I want to see that figure on there, that gross year-to-date. And I want to see the detail breakdown of, yes, $15 an hour of how many hours you actually worked for the week. And you tell me you're working 40, but when I add up the year-to-date income, it doesn't add up to 40. It adds up to like 36 hours a week. So what do you think they're going to qualify you on? They're going to qualify you on the 36 hours a week. So just because you might think you work 40 hours a week, there might have been several weeks this year that you did not work that. Maybe they were slow for whatever reason. I want to look at that pay stub to be able to determine that, because I don't want any hiccups down the road in case an underwriter comes back and says, well, wait a minute, you said they work 40, but they're really not working 40. So I'm going to make sure of that.
And they're pretty picky that way.
They're pretty picky because you can't say you're working this when you're really not working this, because it's based on method of repayment. And also, when I ask for pay stubs, please do not send me screenshots. I've said that over and over again. The reason why, normally it's a screenshot that I usually get from a person's phone, because that's where they get their pay stubs or whatever from their phone, or pull it up on their Paylocity or whatever their phone, but it does not have their name on it. Well, I know you, Mary, but an underwriter doesn't know who Mary is. So if you send an underwriter a piece of paper and you're eventually going to be sold to Fannie Mae, they don't know who this person is. This could be anybody, right? So it's got to have your name on it.
Right.
It's got to have your company name on it. It's got to have, the detail of how much you get paid, how many hours you worked, and it's got to have that year-to-date gross in order for me to calculate it properly. So those are so important. So if I say, I can't accept this as a screenshot, now you know why. It's not because I'm trying to be picky, it's because I need it. The necessary information is not there. With the W-2 or salaried employee, I'm also going to look and ask for W-2s. I'm going to need your 2021 and 2022 W-2s. And what I'm looking for there is, if you've been in the same line of work for a couple years, I'm going to make sure that your income has at least increased or stayed the same, not decreased, like from 21 to 22. Because if decreased, then I'm going to want to know why it decreased. An underwriter is going to want to know why it did that. So you would have to write an explanation. So those are kind of things I'm looking for on a regular person getting approved that's salaried or hourly. Now, let's talk about self-employment. I think when you're not in this line of business, you take, you're not really sure what goes on. So that's why I'm here to educate you and hopefully let you know that on self-employment, it's not just, oh yeah, I'm self-employed. It's not that simple. If you're self-employed and you want to buy a home, you need to be self-employed and have filed self-employment income for the last 2 tax years, the 2 most recent tax years. In order to qualify, we have to see that income. Now, I'm going to, if you're sole proprietor, you're going to do a Schedule C. So I'll look at personal returns. I'll see that Schedule C. I'll be able to add back some expenses. I'll be able to deduct some things to come up with an adjusted gross figure. But obviously, if you're not showing any income for those 2 years, then guess what? You can't qualify. Now, we do have non-traditional products out there that may help people like that, but we're not talking about that today. We're talking about a traditional, conventional, or FHA, whatever loan. So, if you're self-employed and you are scheduled, like say you're S-Corp or a partnership or whatever, I'm going to need those partnership returns, those K-1s, those business returns, federal returns, all pages, in order to be able to determine that income. And again, it's whatever you're showing for those, and I do an average of 2 years. If you've been self-employed for at least 5 years, been in business over that, and you've been filing tax returns for at least 5 full years, then I can use the most recent year, which hopefully that was the better year that you had income. It wasn't a year before. And I'm also going to look at P&Ls, which is profit and loss. Profit and loss, I want to, if you're coming to me to buy a house right now, I'm going to want to see from January to, let's say, the end of April or the most recent end of month, what you've done thus far this year as your business. I had a recent client that came to me, and I love it when clients come to me, and I wish I could help everyone, but I had one recently that just came to me, and he was just starting a business, getting out of one, going into a brand new field, starting a business. Well, unfortunately, I do not have an avenue for him. No mortgage lender would have an avenue for him. That would have to be something that, he would have established. Again, we're looking at method of repayment is what we're looking at. Also, if you're on a fixed income, let's say we're talking about fixed income. Now, fixed income is going to be Social Security, pension, or say a VA benefit of some kind. We're going to want to see Social Security award letters. We're going to want to see pension letters. We're going to want to see VA, say a disability letter, whatever it may be. The reason why we need those every year, I don't know, Mary, if you know this, but every year you get that Social Security award letter that shows you, not necessarily award letter for you as a benefit letter, because we're not retired yet.
Not quite.
Not quite. But we show how much we're supposed to get every year when the Social Security recipients receive an award letter every year. And usually in January or February, that shows how much gross they make. Well, we want to see the gross because we want to qualify them based on that highest amount to get them the most money we can possibly be able to purchase the most. So that's why we want to see that award letter. If you don't have one or didn't keep it, you might have to go to the Social Security Administration to get that. Same with the pension, reach out to the pension company. But you also probably get 1099s for those things as well. Each year you would have gotten a 1099 to either file with taxes, or you may not earn enough to even file taxes, but you would have gotten those 1099s, and I want to see those. I will look at all of that fixed income to be able to determine whether or not you qualify. I want to kind of finish up with talking about some of that, and we're talking about fixed income. Some folks are saying, I get this from time to time, saying they're receiving alimony or child support. You can use alimony or child support as income. That's for certain. But when I ask the question, I always ask, is it court ordered? Yes, it has to be court ordered for sure. I can't say, well, my ex has been giving me $100 here and there. No, that's just not going to work. You've got to have it court ordered. And not only does it have to be court ordered, but I have to show receipt from the Child Enforcement Agency that you've been getting it, that amount, whether it's $250, whatever it is, for the last 6 months. You have to have received it. What I hear from time to time, which is a shame, what I hear from time to time is folks, saying, well, he doesn't pay me faithfully. He hasn't paid me for the last 3 months. Well, if he hasn't paid you for the last 3 months, we can't count it, unfortunately. But yes, you can use child support as income to qualify. So as long as we have documentation and can verify it, that it can be considered as income. Other income things that we're going to be asking for when you are purchasing a home. For example, one of the other things we look at is assets. We also look at assets with as far as 2 months worth of bank statements. And the bank statements that we look at, we want to make sure that we have checking. We want to make sure that we have savings accounts. We want to be sure we have CDs, certificates of deposit, IRAs, retirement, all of those assets that we need to take a look at. And especially if you are, let's say, receiving fixed income or Social Security, what we're looking for on those is to see that you've been getting those types of income and that's going into the bank accounts. That's one thing. The other thing is if you're receiving a paycheck or pay for hourly pay, salary, that's seeing your payrolls going into that account. Not a lot of people pay by check nowadays, but if they do pay you by manual check, we want to see you deposited that check. Hopefully you're depositing the whole check and then you're getting cash out after the fact, not like taking cash in the check and getting cash and all that. But that's another topic for another day. But what I would say is that when we look at the bank statements, we are looking to see how much cash that you have on hand. No, do you have to have a lot of cash on hand to buy a home? There are first-time home buyer programs and non-first-time home buyer programs that you do not need a down payment. But you've got to have a method of looking, you've got to have a method of saying, okay, if you have a checking and savings account and you have only $10 in your bank accounts and your mortgage payment's going to be $1,500 a month, you got to have more than $10 sitting in your bank accounts, because an underwriter or anybody looking at that, all the powers that be, when we are looking at approving your loan, we want to make sure that you've got some cushion set up. You've got a little bit, you've got at least to have 1 month, sometimes 2 months, depending on the loan program, in your bank account that you have to pay your mortgage. And I want to say another thing that we look at is we do look at deposits in those bank statements. When we ask for bank statements, again, please no screenshots. We need the actual bank statements. You can either save them as a PDF and upload them to our friendly loan portal, or you can drop them by the office, or you can fax them to me, email them to me. We do have a secure server, whichever you're most comfortable with. But in looking at the bank statements, I want to see that, yes, you have a bank account in your name. I want to see that it's a current recent 2 months, this most recent ones. And I want to see that you have some money in the bank. I want to see that payroll's going in. If there are any large deposits going in those bank accounts for the last 60 days, we're going to ask you about them. We're going to want to know. And why do you think that is? What do you think? Are we being nosy? What do you think? Why do you think we ask?
To verify.
Yeah, to verify.
Mm-hmm.
Did you get money from an illegal source?
Mm-hmm.
They want to know that because of money laundering and everything like that. No, you didn't, but we want to know. We've got to know. Did you get a gift from someone? If we do, we've got to document that gift.
Mm-hmm.
Make sure it's acceptable donor. We got to get a gift letter signed. We got to get some documentation. So all of that comes into play, and it's just not, I got this $50,000 deposit here, and so what? It's not that. We've got to verify it. You can't get a loan without telling us what it is and providing documentation. Let's say you closed on a house and you deposit the net proceeds from that into a bank account. Obviously, we would want to look at that closing disclosure from that sale of that house. That would kind of match up. Copy of the check, maybe. If you get a gift, we would get the gift letter signed. Hopefully it's from a relative or domestic partner, a long-term friend. So I would say that based on all of that information, we're going to ask some questions if we see large deposits. And there are some programs out there, especially the down payment assistance programs. Some of the companies, they have overlays on what they ask for, and which means they ask for more than conventional programs do. They want some other documentation. So if they see any deposit going in there that's not payroll, they want a copy and they want to know what it is. We've had some crazy times that we've looked at bank statements and so forth, because we've got people that are doing Venmo and all of the crazy things that are out there. And if there are deposits coming in on a regular basis, an underwriter is going to want to know what they are. So you've got to document them. And I can't stress enough, do not put cash in your bank account if you're trying to buy a house, because we really can't verify cash. So if you arbitrarily just put $500 in cash into your bank account, they're going to know and want to know where that came from, and you've got to be able to prove it. And if you can't prove it, guess what? It's not there. Does that sound weird?
No, it doesn't sound weird at all. I just wonder, have people given excuses like, where did this money come
Oh,
from?
Lord, you just don't know. Well, the most recent instance I had was a client told me that he likes to gamble. So he just won something at the gas station and put it in his account. Then it changed to, oh, no, that wasn't it. I got a gift from a relative. So, just be upfront. Just tell me what it is, because I'm going to figure it out sooner or later. Don't try to wiggle away. Just tell me what it is and we'll work through it. My goal is to get you closed on the house. I've just got to figure out, what kind of documentation we can get, what we can get on it. If we can't, we're going to have to back out that deposit of cash because it just doesn't exist. Now, let's say you sell a car and somebody pays you cash. That's fine. Get a copy of the bill of sale. Get a copy of the ad maybe you put on Facebook. Get a something like that, and it says I sold it for $700. Here's $700, whatever. That's fine. We can document that. If it's a gift from a relative, we can document that. But I tell folks if they have cash under the mattress or whatever, yeah, it's got to be seasoned in your bank accounts for 60 recent days. So just make sure there's no cash deposits during that time and no strange things during that time. If we see also on those bank statements, let's say we see a reoccurring payment to, let's say you look at my bank statements and there's a reoccurring payment for $250 to Mary White every month, the last 2 months. Well, what is this? What is this reoccurring payment I'm seeing to Mary? Why do you owe her money? And that could be counted against you as your debt to income. You want to know, and you say, oh, well, I'm buying a car from her and she's doing owner finance, and well, there you go. Unfortunately, I've got to count that now as a debt. So we've got to look at everything. So again, don't shoot the messenger. Just be sure that, we always tell you up front, just be sure with your documentation on what you're looking at. We want to get you approved for a loan, but we're going to have to ask for some things. New house on the block this week. I picked this one because it is a little bungalow. It's located at 165 Cedar Gate Road in Monroe. It's a 2-bedroom, 1 bath, and it's only $150,000. So this home would be great for an investor, a first-time home buyer. I think it would probably be better suited for a conventional loan, and for first-time home buyers, we go down with as little as 3%. So this particular home is listed by Teresa Khanna, and she's with TY Realty, and she could be reached at 434-444-1060. Again, it's 165 Cedar Gate Road, a great first-time home for someone that's looking at buying that small home and just starting out. You've been listening today to Rhonda Holt, and I have been talking about documentation requirements all day. And it's a lot to it. I think that we can kind of continue the series and talking about what's expected when you're buying a home and what things we're going to ask for. We want to make it as simple as possible for you, but we want to ultimately get you approved and get you to closing fast. If you have questions, that you can always reach me at 434-221-6361. You can visit my website at theloanmaven.com. We have a simple application. And be sure to check out previous videos, episodes on our YouTube channel, The Loan Maven. We would love for you to subscribe and like our channel, and we will see you next week where we talk about all things mortgage.